Hello, dear traders. This is Alex Gerchik, or as we are saying, добрый день. A lot of times people asking us questions, what's the reason to listen to me? And I'm going to tell you one more time. Next year, it's going to be exactly 20 years that I'm in a business, in trading. So I'm a professional trader. I'm trading from 1998, but I've been in the securities industry from 1996. And today, me and my company presenting you everything about all the videos about stock market. Today we're going to talk about the stock market, not the forex. As well, I want to let you know that in March we have in our company we're going to have a competition where you can trade on demo account and get the real money for it. It's going to be 55 first prizes, so you have all the chance to become one of the trader who's going to win on the demo account and get the real money. Anyway, I'm going to start right now with the presentation, and I'll explain for you for every single company why the stock looks good or why the stock looks bad. This particular stock, PTCT, if you're going to take a look, it had a lot of stocks I've said before a few weeks ago when we were making another video. So as you can see, there's a very strong level between $12 and $14 a share. Most of the time when the stock is in the range that somebody is accumulating the position, if you can see the stock cannot get out from the range, it means the big guys, somebody big market maker or just big player accumulating a very large position. Usually it's going to be a chance to get out. So we have a chance of $12 a share and $14 a share. If this range is going to be broken, then we can basically fly. Looks like we want to go up. It doesn't look like we don't want to go down. So it looks like the stock wants to go up to the upside. This particular stock, another one, NDLS. If you remember, in October, I was saying about this particular stock. I said the stock is going to get destroyed, and as you see, from like a $4.70 a share, stock went to 350, which is about 25-30% move. Today, what I'm anticipating today, as you can see, the stock started to have a very strong level of $4 a share. But on Friday, this is a very bad bar. I call it a bad for one simple reason. If you see the stock with the one bar covering all the previous gains and closing right below the level, it's very bad for the stock. So what I see right now, as you can see, I'm telling you all of it right before the stock market is open, not after that. So, I don't use any afterwards. This is the forward words. So, consolidation below $4 a share, bringing a very strong short signal. And the first low level is going to be 350. So right now, it looks like the stock is going to go straight down, straight to $3.50 a share. And it's the very bad for this particular company. It's called Noodles & Co. That's the name of the company right here in the left up corner, NDLS. Another stock, as you can see, this is a very interesting situation with this particular stock. I'll explain for you why. Take a look. $8 a share. Very strong level, before. Very strong level. I'll show you where it came from so you'll understand. This is $8 right here, and this is $8. So what do we have? Usually we know one thing for a fact. If the stock is consolidating above or below the level, it's a very important thing to watch out what's going on with this particular stock. So take a look. Every time the stock is below $8, it goes up. It goes up, it goes up. So once the stock consolidating below $8 a share, everybody would anticipate it's a very short, very strong loan signal. If I wouldn't see that move right here, I would basically just wait for the 750. But once you see the stock is consolidating below $8 a share, this is the weak stock, especially when the market is going up. The market is S&P is going to the moon right now, and everybody would probably short the stock. But as you can see, one thing for a fact, the stock doesn't just want to go down. It goes back to the $8 a share. As I said, this is a very strong level right here, $8 a share. See? And it did exactly as it did before. So if you have a company which is supposed to go one way, but it's not consolidated and it's not going, you have all the chances the stock is going to be opposite move. So from $8 a share went to almost $10 a share. It's a very large move. It's almost 25%. And you had honestly, here you had a chance to basically buy the stock in the breakout at $8 a share and make money. So this is a situation which is very understandable, and it's perfectly fine. It's totally the situation, what's going on with the stock, totally understandable. Another stock, SPHS. Take a look. Very interesting situation with this particular company. I'll explain why. $3 a share, a very, very strong level for the stock. As you can see, every time it does a lot of false breakouts. One, two. This is a very large false breakout. Three, especially on the volume. You see the volume was a little bit up high here. I'll put it up right now so you'll see the volume was there. You see, and there's almost if the volume right now 140,000 shares, in that particular day the volume was 2.5 million, and the stock basically came back again 1.4 million shares. The very important thing, what's going on with this company, it's consolidating below the level, but after such a big falls with a big volume, it's not going down. If it's not going down, most of the time it's going to go up. So what do we have? If the $3 a share level will be breaking, but the most important thing, just hear me out. If $3 a share is going to be breaking slowly but surely, it means step by step, not on the big bars, but on the small bars, then you have all the chances the stock is going to break and it's going to go up. It can go straight up to $4, $4.50 a share. You can accept and anticipate the move of like 40-50%. But right here is a very strong level. It's at $2.69. $2.69. If this level is going to be breaking, the stock is going to go straight down extremely fast. So my advice to you for now, it more looks like to the upside. But if, as I said before, if the stock is going to go below 269, it has all the chances to go down. BCOV. Very interesting company. You see, it touched the low. It goes to the downside. It had the false breakout. It does not go any higher. As you can see, the stock doesn't want to go any higher. It's going to consolidate it below $8 a share. It's the very bad for the stock. Chances to go lower. So to tell you, once you see the situation where the company is consolidating below the level, it's supposed to go down because nobody wants to buy. So what I wanted to tell you, in this particular scenario, you can see the company does try to consolidate, try not to go down. As you can see, it wanted to stop the move. So what do you have to see in this particular case scenario? You have to figure it out if the stock it's going to go down or it will not. Very important thing for the next few days to see. If the stock is going to consolidate below $7 a share, the stock is going to be dead. Let's see just weekly chart on it. So you see, once it's going to break down to $7 a share, it has all the chances to go to $6 a share without probably big deal. VRX, very interesting stock. If you remember, I basically was in short in the stock from $140 a share. Just I'll put it right now. Hold on. I'll put it right now. A monthly chart so you'll understand. It was a $200 a share company. A lot of hedge funds this year lost a lot of money on this particular stock. A lot of hedge funds, a lot of money was lost in this stock. As you can see right now, it started to recuperate. Very important thing, as you can see, it slowly go up on a low volume. It means there is no sellers. If the stock is not going, if the stock is going up on a low volume, it means for now it's no sellers. So you have to watch out what's going to be with the stock. If the company is going to break $16 a share, it's going to fly out because a lot of guys are going to do a short covering. Short covering usually very strong thing for the company. So once the company is going to break $16 a share, it has all the chances to go to 18, 20. It's probably even higher. CRME, a very interesting company. Take a look why. As you can see, every time the stock touches the lows, next low is higher than the previous one. So take a look. This low, I'll put it right now so you'll see. And I'll make my point. Low, 255. Low, 255. 265. 279. As you can see, every time the stock touches the lows, every low is the higher than the previous one. So somebody is trying to accumulate a very large position. Very important thing that the stock also had a lot of false breakout and it's not going down the way it's supposed to be. If this particular company, CRME, it's going to slowly come to $3 a share level, then you have all the chances for the stock to have a breakout. And because it's a lot of shorts here, the stock has all the chances to break and go much, much higher. MOD. This stock was expected to go short. I will tell you why. After a big drop down right here, as you can see, usually it's supposed to be a consolidation and up move. The stock, it's not moving up. It had the false breakout. Take a look. You see, it touched the 14. It's consolidated below the 14 and it went lower. So what's going on with it right now? It's going to be probably in a tight range between $13 and $11 a share. You see, $12 a share, very strong level. If the stock is going to break $12 a share, it's probably going to go back to 14. NG, ANGI. The stock looks extremely bad to the downside. I mean, it looks extremely good to the downside. Let's see what's going on. Take a look. It has all the chances to go to $4 a share. This is a monthly chart. Usually, when the stock is right next to the IPO price, then it has all the chances to go low. You see, it started consolidating below 650. It couldn't break 650. This is probably 650. Let's see. Absolutely. You see, high 651. It's trying to consolidate it, but it's staying below 650. So it has all the chances to go lower. And most likely, this company is going to go lower. TDW, our last recommendation. It looks like this stock is going to be dead. This company is getting dead. I just want to show you something. This is a very well-known company, Tidewater, but it looks like it's going bankrupt. Take a look. Just want to show it to you. This is a very old company. The IPO in the company was in 70s, and the stock right now broke the IPO price, and it looks like it's going to get destroyed most of the time. Something is wrong with the company, and it's going to go bankrupt. This is a company. It's called TDW. My dear friends, it's me again. As you see, I'm trying to go with a very short presentation, but very understandable. So I wish everybody good luck. I want everybody to consider it as a Gerchik company as your company, as your broker, and all the best to you. Make money with us, stay with us, go on our website, become our YouTube watchers, become our Facebook fans, and make money with us. Thank you very much. It's been Alexander Gerchik. All the best.